What's going on, everyone? Welcome back to a brand new video, and in this video I'm going to show you my investment portfolio as a 24-year-old from the UK. So firstly, I just want to give some context, and compared to the average ETF investor, my portfolio is, I guess, high risk, but these are companies that I've done some intensive research into and I understand from the ground up. So for the average person, I actually wouldn't recommend investing into these companies because I feel like through a lot of market volatility, a lot of people will sell out of these stocks, compared to like ETFs, which are a bit more stable. But for me personally, this just works as I like to invest in companies that I believe are either undervalued, have a wide economic moat, or are monopolistic. And the first company and my largest position by at least portfolio allocation, and that is Amazon. Now, they're not actually the largest position in my portfolio, that is Google, but I'm building up Amazon to overtake Google at the moment. So I'm trying to allocate around 40%. And the reason I'm so bullish at Amazon is because I genuinely think they have the potential to be, one of the biggest companies in the world, and even potentially, overtake companies such as Apple by market cap in the long run. They've got the e-commerce side of the business. They've got AWS, which has grown 35% year over year. They've got their Prime Video. They're making, chips to compete with companies like Nvidia. So, there's a really diverse company, and I think they have some really good management. And currently they're investing hundreds of billions of dollars into AI every single year, which I think down the line will really help to, increase their business margins and also increase their net margin, and, sort of improve the efficiency of the company. I do feel like Amazon is a company that will really benefit from AI and robots, especially in the warehouse. I saw a statistic the other day that in 2014, Amazon had around 1,000 robots working for them within their warehouses. And as of today, in 2025, they have around 750,000. So gaining 749,000 robots, in an 11-year period is insane. And I think that's just going to exponentially increase going forward, as AI and, robots advance. The second company, which is currently my largest holding, but will go down to my second largest holding, but I do actually believe this stock is the most undervalued stock on the market, and that is Google. Now, the reason I have Amazon above Google in terms of my portfolio is I believe they're more of a diversified business. Google relies on, a lot of its revenue from its search business, but it also does things such as advertising. It owns YouTube, and it also has a lot of subsidiaries such as, Waymo and DeepMind. And if you don't know already, Waymo actually have like an autonomous driving, vehicle service already running, which is, ahead of companies like Tesla. So every single month, hundreds of thousands of people use the Waymo service in places like San Francisco, and I believe they're coming to Miami soon in 2026. And again, Google are growing extremely quickly in cloud, growing around 35% year over year, which is incredible. I think I mentioned earlier on in this video that Amazon are growing 35% in their cloud business, but they're growing 19%. Google are the ones growing 35%. And then the third company with a 15% allocation is Uber. Now, this is a stock that's been beaten down recently, somewhat similar to like Google, as people believe that, Tesla's autonomous taxis are going to, destroy the whole Uber business. But I think Uber already have like the network effect. And if anything, Uber and Tesla will probably work hand in hand. And I think, again, as we continue to go to like autonomous driving vehicles and, Uber expand their margins and they, go into different markets from all around the world, in Europe at the moment, you've got companies such as Lyft and Bolt, which in certain countries, when I've been traveling, are like the main one there. So if they can sort of expand into those countries, we get autonomous vehicles. I think this could be an extremely valuable business. And currently Uber's growing at around 20% year over year, which is incredible. And the free cash flow is increasing massively. So I wouldn't be surprised if Uber start to pay a dividend soon or continue to do share buybacks. And the fourth company, and probably the closest thing we have to a perfect company, and that is MasterCard. Now, I have around a 10% allocation to this position, and I do believe MasterCard is probably maybe the most overpriced stock in my portfolio at the moment, looking at the fundamentals. Its PE ratio is quite high, but I think it's such a high quality business that I'm going to just, continue to buy and could potentially hold forever this stock. It has such an incredible margin, such an incredible moat. The only competitor it really has is Visa. And a lot of people think that MasterCard and Visa actually issue the cards, but they don't do this. It's simply just, the network where transactions take place. And every single time you use your, credit or debit card, MasterCard or Visa will take like 1 to 2% of that transaction value. And then, you multiply this by millions and millions of transactions every single day. That 1 to 2%, it really does stack up over time. And then the final company in my portfolio is American Express, and I have a 5% allocation to this stock. Now, personally, I use my American Express card every single day, and I've been a loyal customer since 2022. This stock, to some degree, is because, I use it every single day, and I just think they're such an amazing company, that offer a really sort of, high quality premium service. The net margins are, increasing slightly over time. I think this is a really good dividend stock. I do think they, take on more risk compared to companies like MasterCard and Visa, as they do actually issue the debt. So, they take on that responsibility. So, people could, spend a lot on the credit card, not be able to pay it off and then default. And then that, has a negative effect on Amex. So that risk, isn't associated with companies like MasterCard. So there is a bit more risk associated with Amex, but I think this is still a very, very, solid holding. And even Warren Buffett himself currently has MasterCard at around 16% of his portfolio, which, has grew in recent times due to the amazing performance of the stock the past 5 years, where I think it's grew about 250%. And based off the historic return of this portfolio since it's been on Trading212, it's actually averaged around a 20% return every single year, which is phenomenal. And you understand that it's a really sort of, very sort of niche small portfolio, and some people may say that, my allocation isn't very, risk diverse. But as I've said, I've done loads of research into these companies. I really understand the business models. I think they're all amazing companies. If I were to, I can't really recommend stocks and I can't offer financial advice, but if I were to start again, completely from scratch, and I didn't really have much money to invest, personally, I would focus on companies such as Amazon and Google. Then if you're, willing to take on a bit more risk, you invest into Uber. And then if you want to sort of add a bit of diversification, you can add companies such as MasterCard and American Express. I don't think American Express or MasterCard are particularly cheap at the moment. I think, American Express is probably trading at a fair value, maybe slightly above. And as I've already said, I think MasterCard is trading at a bit of a premium, but it is justified as it's, basically the perfect company. So yeah, I do believe Amazon, Google, and Uber are, the undervalued stocks at the moment and the one I'm buying heavily. So if you enjoyed this video and want to see more finance videos, make sure to follow my page and double tap